Do you agree with Cathy's bullish views on Tesla, or do you have different opinions? In this video, we'll look at what Tesla is currently working on and what investors, like Cathy, think of these projects. We'll also include a little profit projection that may help you choose your next financial venture. So without further ado, let's get started. First, make sure to hit like and subscribe to Tesla Insights. In a recent article, ARK Invest made a bold claim the Cybertruck has the potential to become as mainstream as the Tesla model. This revelation is quite remarkable and has created a lot of excitement. Intriguing article that challenges low expectations and highlights a blind spot in the industry. Many automakers currently finance the development and sales of unprofitable EVs using profits from their gas-powered truck sales. Previously, analysts, forecasting agencies, and auto manufacturers believed that electric vehicles (EVs) would remain a niche product. However, it appears that they were mistaken about the potential of the Cybertruck as well. There is hope for certain automakers, including GM, as they're finally making the right moves, albeit a little bit late. Traditional automakers could face severe difficulties if Cybertruck were to disrupt this profit center. Then, ARK Invest goes back in time, showing how the U.S. Energy Information Administration projected in 2014 that by 2040, long-range electric vehicles will have little to no market in the U.S. One would think that the EIA must have drastically altered their estimates, maybe expecting at least a 50% market share, but even that would still be regarded gloomy, given how shockingly the market share of us EVs reached 5% just a year later. It's significant to remember that by 2030, 2035, and 2040, a number of states and regions across the world intend to outlaw the sale of vehicles with gas engines. Without a doubt, these elements would be taken into account while making projections. ARK Invest has been outspoken in its criticism of the Energy Information Administration's forecast, even speculating that the intelligence underlying these projections has diminished. They expressed doubt about the EIA's ability to correctly predict the trajectory of the electric vehicle market. ARK Invest demonstrates Legacy's lofty goals. The industry's established players, such as Ford and General Motors, are challenging the idea that EV adoption is just a niche trend by highlighting their forward-thinking strategies and pointing to their heavy investment in electric vehicles as evidence that the EV revolution is well underway, and pointing to these companies as examples of traditional automotive giants moving towards a more sustainable future. ARK Invest seeks to undermine the EIA's forecast, arguing that their evaluations fall short of fully appreciating the market's potential and quickening growth. This critique highlights our conviction in the widespread acceptance of EVs and their belief that transportation will become more and more electric in the future. While GM intends to transition to all electric vehicles by 2035, Ford anticipates 40 to 50% of its global car volume to be electric by 2030. Given that numerous U.S. states, including California, which alone accounts for roughly 13% of the U.S. market, want to outlaw the sale of gas-powered vehicles after 2035, I really doubt the data the EIA is using. Despite my seeming displeasure, it becomes apparent that the EIA's forecasts are inaccurate. These forecasts have rather thrilled me because they provide us investors a great chance. Although I don't think the EV acceptance rate will be as sluggish as the government agency predicts, fund managers and retail investors are also unaware of the facts, in addition to the government's intention for a slow adoption rate. I have to admit that not many people can be as misinformed as they are. It appears that they did not understand the idea of exponential growth, which is clear by looking at previous global trends. Moreover, even though electric trucks are expected to have a market share of less than 10%, the EIA projects that trucks would make up 69% of all vehicles in the U.S. by 2050. On the other hand, ARK Investments disputes this prediction and notes that there are already 1.5 million reservations for the Cybertruck, which increases the possibility that electric trucks will succeed. Based on early Google Trends data, it looks that the Cybertruck could become as popular as the Tesla Model Y. Now, I know that using Google Trends alone may not be the most accurate way to make predictions, but hear me out. On April 2, 2023, right before Elon Musk tweeted about touring the Cybertruck production line, more people searched for the Cybertruck on Google than for the Model Y. Notably, the majority of these searches came from truck-loving areas, suggesting a potential desire to buy the Cybertruck. The map's intense red color denotes the concentration of searches in these particular places. In the end, the Cybertruck's success will mostly depend on how much it costs. If it's too costly, sales may not be as strong, but if Tesla can provide a more reasonably priced version, sales may soar. Investment firm Arcane West continues to emphasize that although sell-side analysts may be uncomfortable projecting the electric vehicle market to develop at an exponential rate, It would be a mistake for them to overlook the possible consequences of the success of Cybertrucks for conventional manufacturers. ARK Invest estimates that by 2027, global EV adoption might reach 70%. While this number may sound high, it's not completely out of the question. A photo of a Tesla Cybertruck has been making the rounds on Twitter, and experts are debating its quality. It's important to remember that the Cybertruck is still in the prototype stage, but given that the Model Y has emerged as the best-selling car of the year, we can assume that Tesla will uphold high-quality standards moving forward. Any initial worries about quality can probably be addressed and resolved. Recently, Cathy Wood spoke on Bloomberg about Tesla's focus on artificial intelligence. She brought up the autonomous taxi network that Tesla is rumored to be developing. With the exception of the unidentified players in the Chinese market, Tesla has a substantial advantage over other auto and tech companies in terms of proprietary data and real-world driving miles. Wood thinks that the autonomous taxi platform offers a huge opportunity with a company that can transport passengers safely and quickly from point A to point B, predicted to dominate the market share in the United States. Wood thinks Tesla will be that business, and by 2030, this potential may bring in trillions of dollars in revenue worldwide. Because of this, Wood and her team are especially enthusiastic about Tesla's artificial intelligence AI breakthroughs and the company's growing manufacturing efficiency in both factories and automobiles. While some may view Cathy as quite enthusiastic about Tesla stock, upon deeper inspection, her track record shows an incredible success rate, especially with Tesla. I completely concur with Cathy's points of view, especially her emphasis on how important fully autonomous driving technology will be for Tesla in the future. Not only does Cathy deserve recognition for her outstanding performance in the Tesla stock market thus far, but it's also important to note that her choice to hold on to her Tesla stock when it surpasses the 10% allocation restriction has worked to her advantage. Cannot raise her holdings after the stock rises over this level, but she has shown that hanging on to these investments may produce remarkable returns. Her performance over the previous 5 years would have been far worse, roughly minus 10%, had she sold her Tesla shares each time it rose above 10%. Our relationship with China during the COVID pandemic has been quite intriguing. Initially, we saw potential in China's monetary and fiscal policies, prompting us to invest significantly. However, since November 2020, the situation has changed dramatically. Management teams have faced severe restrictions and regulations, resulting in our decision to significantly reduce our exposure in China. The concept of common prosperity has emerged, which implies lower profit margins and limited services reaching only if you're one into your two cities, while we still maintain some involvement with JD Logistics and JD. We have minimized our exposure until China becomes more welcoming to international capital. Once again, as someone who has an immense fondness for Tesla stock, the only concern that keeps me on edge is its exposure to the volatile relationship between the United States and China. However, I believe this concern is mostly short to medium term in nature and the long run. Tesla's strategy to diversify its operations and building gigafactories abroad will progressively lessen China's influence. In addition, even in the worst-case scenario, when trade barriers exist and tensions rise, Chinese enterprises will still be involved, may find it difficult to enter Western markets, and Tesla may have trouble selling in China, given that country is anticipated to produce strong competitors in the long run. Nevertheless, these circumstances might not always be negative. Thank you for your time, and we'll see you in the future video. If you like this content and supported us by subscribing and enjoying it,